President and Director of SSI Group, Inc., and all of its subsidiaries. And over the past 22 years of experience in the, he has over 22 years of experience in the retail industry and serves as the Executive Vice President of Rustan's Marketing Corporation and is also a board member of Santa Elena Properties and Commonwealth Foods, Inc. It'll be my distinct privilege to introduce you to Mr. Anthony Huang.
Good morning. I have a confession to make. Art Tan and myself are very, very good friends. He claims that he was my front act. It was actually my first time to see his presentation, and had I seen it beforehand, I would have insisted that we be allowed to do a fashion show. So, Art's definitely a tough act to follow. Well, before anything else, thank you so much to COL Financial for inviting us to present to all of you today. Allow me to start out with this slide that gives you a general overview on what the SSI Group is all about. Today, we are the Philippines' #1 specialty retailer, both in terms of the number of brands that we have under our management, as well as the number of stores that we have in our network. As of the end of 2014, that was 106 brands and 723 stores. Contrary to popular belief, our target market is actually more than the upper market segment. Today, more than 50% of our sales are actually contributed by retail concepts and brands that cater to the middle income segment. So, as far as the market segments that we cater to, we do cater from the middle income all the way up to the luxury consumer. In the recent past, we've likewise diversified our retail formats to include that of convenience stores under a joint venture with Ayala Land and Itochu Corporation of Japan / Japan Family Mart to develop the Family Mart chain of convenience stores here in the Philippines, as well as a joint venture with Ayala Land for a mid-market department store concept called Wellworth. As far as Family Mart is concerned, as of the end of 2014, we had 90 stores. As of February 28th, we celebrated our 100th store opening, and we are continuing to expand that very aggressively throughout the Philippine territory in the years to come. As far as Wellworth is concerned, we do have our first store in Fairview Terraces Mall, which is an Ayala Land development, and we are opening our second Wellworth location at the University of the Philippines Town Center May 15th of this year. Looking at the center part of the slide, if you look at our core business, we divide it up into 5 different categories: luxury and bridge, casual, fast fashion, footwear, accessories, and luggage, and the others category. And as you can see, in terms of the contribution, sales contribution per category, it's pretty well spread out across the different categories. In this particular slide, what I'd like to do is really summarize what the SSI Group investment story truly is. First, and as I had just mentioned, we are the Philippines' #1 specialty retailer of international brands. Secondly, we are strongly positioned to leverage on the Philippines' fast-growing consumption-driven economy. Third, we do have the most extensive network of directly managed stores, not only within Metro Manila, but that of the Visayas and the Mindanao region as well. Fourth, we do have brand-centric execution capabilities, which have in fact cemented our very long-standing relationships with the different brands that we represent here in the Philippines. Just so you know, majority of our relationships have been in fact with us for 10 years or more. And fifth, we have a clear growth path. And this clear growth path is supported by our store expansion program with all of the new real estate opportunities that are coming up within the next few years, as well as the quality and superiority of our brand portfolio. Looking at this particular slide, this gives you a timeline on how we've developed the business through the years. and the different brands that we've acquired, key brands that we've acquired in different stages. Looking at our key success factors, yes, we do have a track record today of more than 25 years. We do have a continuously growing and broad international brand portfolio. And really, if you ask me as a success factor, or one of our key success factors that truly is driving the company today, it's really what we bring to the table as far as our dealings with the landlords are concerned, and that for us is delivering critical mass to any real estate shopping mall development. In other words, if a shopping mall developer wants to have an international brand or global brand presence in their malls, we necessarily have to work with them because we do bring critical mass. And what the nature of our industry is, the different brands that you see, that you shop in the different malls on a regular basis, they do like having their closest and strongest competitor next to them. And as I said, that's what we bring to the table. If you look at our brand management or our brand portfolio, we do have the world's most coveted brands under our management. And when we come into the mall, we bring those brands. And when we come into those malls bringing those brands, then the rest of our competitors likewise follow. So taking that into account, our belief is that we are the tenant of choice. And as the SSI Group is likewise the partner of choice for most of the global brands that want to come into the market. Looking at our brand agreements, majority of them are exclusive. We have 3 to 8 year terms that are all renewable. And as I mentioned earlier, our partnerships have been with us for 10 years or more. Looking at the macroeconomic fundamentals in the Philippines, as all of you are very keen investors, I'm sure you're all very, very familiar with this. 5 key factors really. Number 1, our growing population, the increasing household wealth, increasing OFW remittances, the buoyancy of the BPO industry. Suffice it to say that when it comes to our type of business, we operate in one of the most attractive markets in our region. Looking at our store development, today we are in 69 major malls. So that's 723 stores, and those 723 stores do not include Family Mart. No, those are the international brands, that fashion, retail, footwear, so on and so forth. So 723 stores spread out over 69 major malls in the country. Yes, today 70% of our stores are within Metro Manila, but we are increasing our footprint as new shopping mall developments come up in other key cities. We are increasing our footprint throughout the country. Today, we are in fact in Cebu City. Just this year alone, looking back at 2014 first half, we opened Zara in Cebu for the first time. We opened Aeropostale. We opened F&F, Cash, Superdry, Gap, Muji, and a few other brands in Cebu 2014. Not that it was our first time in Cebu. We have, in fact, been in Cebu for 15 years now with the likes of Marks & Spencer's, Nine West, Lacoste, CK or Calvin Klein Jeans, so on and so forth. But Cebu today is a growing market, and we were very, very keen to expand and have the opportunity to expand, and we are grateful that real estate developments did, in fact, come up last year, and there are more coming up this year, and we're very, very keen to further expand. This coming year, we're looking at opening the likes of Stradivarius, Bershka, Old Navy in Cebu City as well. We are likewise heavily invested in Davao with brands such as Marks & Spencer's, Gap, Debenhams, Beauty Bar, and many others. And we are likewise in the 4th largest city in the Philippines, Cagayan de Oro, as well as General Santos. So as new real estate developments come up, we're definitely there. The secondary cities are definitely coming of age, if I may use that term, and from a consumer standpoint, becoming more and more sophisticated, and disposable income-wise, likewise increasing. So that being said, looking at our various brands, I apologize that it's a bit messy, but just showing you how we have in fact grown our portfolio through the years. Our first 10 years, we were operating 16 brands. Our next 9 years, we then acquired 46 new brands over that 9-year period. And over the last 3 years alone, just taking into account where the Philippine economy is at and how consumption expenditure has really grown, we've added 44 new brands into our portfolio. I did mention that we have a very clear growth path, and one leg of that growth strategy is definitely the opportunity to grow our store network. Looking at the left-hand side of this slide, you'll see that we've grown our store network by a CAGR of 24% over the past 3 years. And I think what's interesting in this particular slide is on the right-hand side, you'll see that we've actually grown it across all the different categories. So just taking into account the development of the Philippine consumer today and how both the middle income segment and the upper market segment are in fact growing by leaps and bounds over the past few years, we have taken the opportunity to grow the store network across the various categories that we trade in and not just focused on 1 or 2 categories. The past 3 years have truly been unprecedented for us. If you look at the right-hand side of the slide, you'll see here that in 2012, we grew our store footprint by an additional square footage of 13,000 square meters. And in 2013, we grew that by an additional 15,000 square meters. And in 2014, we grew it by an additional 36,000 square meters. I just mentioned that this was truly unprecedented for us. I have personally been with the company now for 25 of its 27 years. And the one and only time that I recall ever doing something close to this, which was 10,000 square meters, was back in 2003 when there were 2 shopping malls in the Makati City area that opened. Other than that, our store expansion rate was at 5,000 square meters and below. So really, just following the increasing consumption patterns and new real estate developments that have come on stream here in the Philippine market of late, we likewise have been growing very, very healthily. This particular slide gives you a snapshot of our financial performance. As you'll see here, we put in a lot of work in terms of not only growing our top line, and our top line has been growing very healthily, but we've likewise been putting a lot of focus on growing our margins, and we've successfully been able to do that over the past few years on a steady basis, and we have in fact shown that we have been able to maintain those margin rates. That being said, just looking at year-end 2014, we are in the process of waiting for our audited results. But just looking at 2014, it was a very, very good year for us. It was a very fulfilling year for us for sure. And we grew our top line sales by 19%. And in terms of the fourth quarter alone, we grew our top line sales by 26%. So very happy with the year. We've likewise managed to maintain margins throughout 2014. And we're very happy with the results. Lastly, in terms of our being a publicly listed company, we're very new at this. As some of you may know, we listed our shares in the Philippine Stock Exchange last November 7th. It was exciting times for us. We are part of the Rustan Group, and we are the first publicly traded company within the group. And with your support, the market has received us very well. And over the past few months, our stock price has risen by 39%. As I said, many thanks to all of you. So that being said, I'm happy to take questions at this point. Thank you.
Again, good morning to everybody. And thank you again for our guests for coming over to give us time to explain a little bit more about their company. And congratulations again with the successful IPO offering that you had late last year.
Thank you.
We'd like to be able to run through some of the questions that were sent to us with regards to SSI. May we have one, please? All right, if I just read it, can you please talk about the expansion plans for the next few years, in particular new store locations, new brands that you might be taking up? And should we expect the growth to taper off on these particular brands that you might be issuing?
No, so thank you so much. Well, first of all, in terms of our expansion plans, I did mention that the past 3 years have really been unprecedented for us in terms of new store openings. Now, our store opening rollout continues over the next several years. As far as visibility is concerned, today we have visibility up until 2016. So for 2015, we're looking at an additional 18 to 22,000 square meters. And that is just for the brands that we have currently under our portfolio. It doesn't include new brands that have yet to be announced. No? Next year, we're looking at an additional 18,000 square meters. And again, those are for, or 16,000 square meters. And those are for locations or shopping mall developments that we have already, in fact, committed to. That being said, there are several other developments that we're still reviewing. And we have yet to decide whether or not we will be opening in those locations as well. We are just taking into account the fact that we are one of the largest lessees of the different shopping mall developers. As you can imagine, we do have regular discussions with them, and we do have, in fact, visibility as well, at least informally at this point, as to what their 5-year plans are in terms of mall rollouts, and that is something we're all considering at this point, and definitely they are in geographic locations that we want to be in, and we just have to finalize really which ones we're going into and which brands we will be locating in each of those developments. But there really is a very, very steady supply of new shopping mall developments that are coming up, just taking into account the growth, continued growth in consumption expenditure, and the increasing sophistication of the consumers, not only in the suburban areas within the metropolis, but likewise the secondary cities throughout the country. And we're very excited to be able to tap those new markets as far as our retail network is concerned. Today, we have never, from a business development standpoint, given ourselves a quota in terms of new brands. We feel that as retailers, the one thing that we do, the value add that we have as a retailer to brand partners internationally is our keen sense of the Filipino consumer. And as far as we're concerned, we have to keep our ears on the ground to really determine how the lifestyles of our consumers continue to evolve. And it is our responsibility as a retailer to satisfy those needs. And we are always on the lookout for new brand opportunities. I think a case in point there is our focus for many years was really in fashion accessories and footwear. But just seeing how the lifestyles of our customers, our primary customers, have evolved, we figured that today is the right time for us to start developing retail concepts that cater to their needs for home products at a mid-price point, at the kind of aesthetic that they would like to have for themselves. No? So we did start looking throughout the world for new brand opportunities, and a case in point there is the likes of our having opened Pottery Barn last year and Pottery Barn Kids, and this year we're opening West Elm and Williams-Sonoma. We likewise this year are opening brands like Reese, for example. We just opened a new health food chain concept called Salad Stop in Bonifacio that is doing extremely well, and we're opening our second store this coming May. We do have 4 other brands that we are currently in the final negotiation stages for. And unfortunately, I'm not at liberty to mention what those are, but they are, suffice it to say that they are very, very exciting global brands that we're very, very excited to be launching here in the Philippines, hopefully towards the end of the year, at the latest early next year.
And with regards part of those brands that you were talking about, have you noticed current escalation in the way much of the take-up of these upper luxury brands have actually been in the last maybe 2 or 3 years?
Yeah. Well, I think, allow me to answer that 2 ways. No? First, as far as our heritage is concerned, admittedly, our heritage were for the, I mean, were brands and serving the customer needs of the upper market segment, right? But 6 years ago, we actually made a strategic decision, taking into account the macroeconomic fundamentals in the country, that we would want to expand our retail concepts to include that of stores or brands that cater to the middle income segment. We focused on that. We did that quite successfully. Many of the brands that we opened over the past 5 years have been middle income brands or broader market segment brands. Brands such as Old Navy, for example, which I'm sure many of the people in this room are familiar with. The likes of Stradivarius, Bershka, Aeropostale, for example. They've all been doing extremely well and continue to really drive growth, right? But that being said, our heritage business, the upper market segment brands, continue to grow as well. The upper market segment is growing. I mean, the economy says it all, right? The economy is very buoyant. The upper market continues to grow, and consumption expenditure at that level continues to grow as well. But I think the one thing that I do want to point out, which is very exciting for us, is if you look at the middle income segment, that middle income segment, with their increasing sophistication and increasing disposable income, is likewise becoming more aspirational. So there's a lot of the trading up, right? And people that used to buy our lower price brands are buying our more expensive brands and moving, and those that used to buy the moderately or affordable luxury brands are now buying the luxury brands, so on and so forth, right? So there is the trading up phenomenon that is going on, and we're definitely benefiting from that throughout our portfolio.
Thank you. May we have the next question, please? Are you concerned about the competition, especially considering the entry of many other international brands in recent years?
Well, I mean, to be honest, for me, I think it's a good thing. It's a good thing that competition has increased. Yes, we have been alone in the market for many years, and over the recent past, there have been a lot of new international global brands that have come into the market, especially in the fast fashion space. What has happened, though, is that it has really made the market for that type of product all the more larger. No? It made the market bigger. Case in point, for example, Zara for us is a great brand, and it's a great product at a great price point. As Zara opened, I mean, we've been expanding Zara, and with the opening of H&M, for example, Uniqlo, and Forever 21, sales of Zara have in fact continued to grow. And in the locations or in the shopping malls where our competitors have opened, our sales of Zara in those malls increased too. So what has happened really is all of these new competitors coming into the market has really sort of reinforced the education and increasing sophistication of our customers in terms of choice. And what used to be something that they would buy for special occasions in the past is now today the norm, right? I think it's the same case with what we've seen in the convenience store space. As many of you know here, 7-Eleven, for example, has been in the market now for 20 plus years. They have 1,200 stores. Mini Stop has been in the market now for 15 plus years with 420 stores. We're the third player in the convenience store space, having opened Family Mart April 7th of 2013, and in less than 24 months we've opened 100 stores, and our ambition is to definitely be a strong number 2, and in a short span of time. And so we're opening very aggressively. I think as far as competition is concerned, our having entered the market at a very late stage has intensified competition. I think competition is likewise good because it has forced the whole industry as a whole to likewise step up their game, right? So since we've opened, you'll see that the likes of 7-Eleven have started to renovate their stores. They've started to make their stores larger. They've started to put the amenities that we opened with in our stores, such as tables and chairs, bathrooms, and even the merchandise offering. We opened very strongly with our ready-to-eat food offering, which has been extremely well received by the customers. And today, you see the likes of 7-Eleven and Mini-Stop likewise doing the same. So in my mind, to be perfectly honest, from a business perspective, competition is always a good thing, not only for the people that run the businesses, but ultimately for the customers.
Thank you. Next, please. How would you then protect yourself against rising rental rates, particularly because there is an expectation that commercial rates may pick up relatively soon?
Yes. Rental rates escalate. I mean, that's a fact of life. As costs increase, then definitely of the landlords increase, and then the rental rates increase as well. On our side, we're fortunate that we do have the leverage to negotiate for good rental rates. We are, in many instances, the single largest tenant of the shopping malls that we do enter. And as such, we do like taking space on what we call a wholesale type of basis, and we take big chunks, and and on that basis, we then divide up the spaces for the different brands that we manage. No? And so we do have, we believe that we do have leverage in negotiating the rental rates that we have.
That's good. Thank you. Can we have the next question, please? So there's a lot of skepticism towards the company's ability to sell because the wealthy typically go to other countries to buy designer goods at cheaper prices. Moreover, there's also growing popularity of buying online and having products shipped locally. How do you address these challenges? Are you moving to the online space?
Yes. Well, yes, as far as online is concerned, today e-commerce is still at its infancy here in the Philippines, and the reason behind that, as far as I'm concerned, is really broadband penetration, right? Yes, it is increasing, but the quality of broadband still leaves a lot to be desired. So that is a hindrance today, but e-commerce is one of these things that once it reaches its inflection point, it's just going to go. We have had a small online presence for the past 2 years with our beauty bar chain, and it's been successful. It is a very small business for us, but it's a business that on a monthly basis has been growing on a month-to-month basis over the past 24 months. So it was encouraging, and actually last December we launched a website called ssilife.com.ph, and that site today has, I think, 20-something brands. 20-something brands out of our 106 brands are now being sold within the ssilife.com.ph site. We just started marketing it 2 weeks ago, or 3 weeks ago now. So we're monitoring how it goes. But I personally have used it several times, and I've gotten my orders, right? So hopefully the others aren't experiencing anything negative at this point, but we're continuing to monitor it, and so we want to be ready. We want to be ready once the e-commerce space really moves. Then we'll be there. That being said, we likewise are currently amongst the e-commerce players that are in the market today. We're the only e-commerce player that can take an omni-channel approach. And what is an omni-channel approach? It's really providing our customers with a choice of either shopping within our physical stores or shopping online and then picking up in our stores or paying in our stores, or in other words, doing a combination of both. No? So we do have that capability today. And today, as I said, we're the only retailer that has an e-commerce operation that is an omni-channel one. Going back to the first part of the question, yes, I mean we do have competitors in Hong Kong, right? Hong Kong is being a duty-free market. Yes, is in fact a cheaper alternative for many, especially the luxury goods. But that being said, the one thing that we've seen is, and we've proven throughout the 27 years that we've been in existence, is that when it comes to fashion and fashion accessories and footwear, the female customers that we have, and especially the loyal ones, there is such a thing as the instant gratification phenomenon, right? When it comes to the kind of products that we sell, the instant gratification effect is very, very important. And the need to have to wait till they go to Hong Kong and the like, is not acceptable, right? So that is somewhat different when it comes to higher value items like jewelry and watches, admittedly. For jewelry and watches, yes, people are wanting and willing to wait for a 10%, 5 to 10% price difference. No? But for fashion and fashion accessories, especially since it's seasonal merchandise, the instant gratification effect is there. Now, there's another component there as far as customers are concerned, right? I was mentioning that we do have the middle income customer trading up, and that middle income aspirational customer, which today is a huge chunk of our customer, is not necessarily traveling as often to Hong Kong, right? And they are shopping in the Philippines, and they're a huge part today of our success.
Thank you. Maybe we can take one more, please. All right, historical. How has SSI addressed changes in fashion trends, and how do you intend to cope with these changes?
Well, I'd like to think, if you'll allow me to say so, that we have in fact been catalysts. SSI as a whole, we've been catalysts as far as fashion trending is concerned here in the Philippines, right? I would like to think that we have been instrumental in likewise educating and influencing how people dress and how people shop here in the Philippines. That being said, I did tell you earlier that as a retailer, we feel that our biggest value add is knowing our customer and being able to tell what that Filipino customer is going to end up wanting and needing in the years to come, right? And we match that with what we see overseas, right? Because our buyers do travel the world throughout the year, and they're sourcing merchandise, selecting merchandise, and we put our market knowledge and what we see out there, our sourcing knowledge together, really to come out with what we feel is best to offer our Filipino customers. That being said, as we are influenced by our buyers seeing what they see throughout the world in terms of trends and the like, we then bring that forward to the Filipino customer as well, and we adapt our selection to the climate, the everyday realities of life in the Philippines.
So, Atienza, would you like to add anything for investors that you'd like them to keep? Okay. Well, I guess thank you again, Mr. Huang, Atienza, for gracing us, and again, more power to you. Congratulations again on your successful IPO. SSI, everyone. Thank you very much.